Welcome back to another episode of Financial Modeling. In this video, you are going to learn how to do a cash flow statement modeling. So let's begin with 2010 past paper. So in 2010 past paper, you are given a format for cash flow statement. Now from that, you have to fill up the cash flow statement for the first 6 months. And you have given these additional information. Now let's start. First of all, I have to type the table in the Excel. So after that, we have to go one by one each additional information to fill up the cash flow forecast for 2011. Now let's start. So here the first one says salary will be the same for the remaining months, which means salary will be constant for the remaining months. So we have to put the equal sign, then we have to put the absolute sign, or we have to fix the cells. For that, we can use the F4 key in your keyboard. Then drag it up to the June. Then second one, it is about interest. Interest will increase by 15% in each over the value of January, which means in each month, it will be increased just by 15%. So this is the interest portion. Now we have to multiply it by 15%. Because it's increment, we can take 1.15, or if you want, you can put it as 115%. Both are correct. Now you know it will be increased by 15% in each over the value of January. So January figure should be constant. Therefore, we are going to fix the cells or absolute the cells by using F4 key. After that, we are going to drag it up to the month of June. Then we have to get the total inflow. So total inflow equals the summation of salary and interest. I think it's more convenient if we can leave it with the 1000 separator. Therefore, I'm going to highlight all the cells which contain numbers. Then I'm going to go for home tab, and in the number tab group, I have this 1000 separator comma style. Then you can see everything with 2 decimal places. So if you want, you can remove the decimals by using this decrease decimal option. This is the total cash inflow. Then water. It says water will remain the same for the first 2 months, and thereafter it will increase by 5% each month over the value of the preceding month. So first 2 months it is fixed, which means January as well as February, this figure will be fixed. And after that, it should be increased by 5% over the value of preceding month. Preceding month means the previous month. So this figure should increase by 5%. 5% means we have to multiply it by 105%, because we are going to add it up to the 100%. Then we can drag it up. up to June. So I'm going to show you the formulas now so you can understand in a better manner how we are done this question. Here also, my children, you can use decimal places to multiply. So the next one. Electricity will be increased by 7%, 12%, and 15%, and so on for the remaining months over the figure of January, which means the electricity in February should increase by 7%. So we are going to refer the January value, then we are going to multiply it with 107%. Then March, this February should increase by over the figure of January. So we have to refer this January cell and then it should be multiplied by 112% because it says over the figure of January. Right? Over the figure of January means everything should be multiplied by the given percentage, but we have to refer the January value. So in this one also, we have to multiply the January figure by 115%. Then this value will be remain over the period of time. Therefore, I'm going to fix this cell. Then I'm going to drag it up to the end of June. Then traveling. Traveling will increase by 5% in every 2 months. So in these 2 months, it will be same. After that, in the March, it should increase by 105%. Then it will be same, right? It will be same for April as well. But in May, this figure should increase by further 105%. I'm going to fix the cell because if not, it will take the relative cell. Now, next one, rent will be remaining for the first 5 months. So here, the rent should be remain same for the first 5 months. Since we don't have any other indication, we are going to take it as in the absolute manner for the rest of the period. Then we have to take the total out. That is the summation of all the cash outs. Now, in the next one, we have to take the net cash. Net cash is the cash inflow minus the cash outflow. Now, I'm going to get the total for each category. Therefore, I'm going to give the sum function to add up each value in the cash flow. Then I'm going to drag it up to the end. When there is no data available, I'm going to delete them. Then now I have to put the balance. So in the paper, they may given the opening balance. So you have to take the opening balance. Now you know, right? So here the balance should reflect the net cash flow. Now you know the end balance is the net cash flow plus the opening balance. So you can drag it up to the end of June. Now let's start with the beginning balance. Beginning balance of the February is the opening balance or the ending balance of the January month. January end will be the opening figure for the February month. Then you can drag it up to the month of June. Now here, there is another indication. So here, ultimate balance should be 105,000. But here you can see in the total column, it has added up to 383,543, which means it is incorrect. So here, as the opening balance, you should refer the opening figure in the January month. Then, at the end of the month, you have to get the total of these two only. So you have to refer the sum of these two only. If not, your cash figures may incorrect. I think you have got the point. So here, the start of the January month should be the starting point of the total column. And here, the end of the month figure should be taken by adding only these two figures. Now you can practice yourself. So I'm going to show the formulas so you can refer it easily. In the 2010 paper, they haven't asked to use the maximum functions. That's why I have applied it in the most probably the mathematical function manner. But if they ask to use more functions, then I would definitely use transpose function and product function in order to multiplications and referring the same idea without duplicating them. Now, I will move on to the 2018 paper. Up to now, up to this year, we have just two cash flows in our past papers. The next one is in 2018 paper. In 2018 paper, they have given the cash flow forecast statement for 2019 and you have given these data. And the additional information as follows. they have asked you to prepare the cash flow just for 11 marks as the first question. So shall we move on? So in 2018, paper, these are the data you have. So I'm going to refer it to the formulas. First, they have asked about the following details. Now, first one, cash sales will be increased by 5% in each month over the value of preceding month. So each month, the cash will be increased by 5%, which means 105%. So here, I'm going to refer the product function so you can understand in a better manner how to apply maximum use of functions. So here, I'm using the product function. So here, I'm going to multiply this sales figure, right? And I'm going to fix this 105%. So each month, this should be multiplied by 5%. Now, when I drag it up to the month of June, you can notice that each figure has been multiplied, but the rate is fixed. Right? So the next one. Compared to January, receipts from debtors are expected to increase by 5% in the first 2 months. So the receipt will be increased by 5% in the first 2 months. So here, compared to January. So this figure should be multiplied by 105 in the first 2 months. Right? So here I'm going to use the product function. So this figure should multiply by 105 and it is fixed for the first 2 months. And this January figure should be also fixed. Why? Because we are going to refer the same value for first 2 months. Which means in February and March, we have the same figure. First two. Then it will be increased by 10% in other balance month. So this should be increased by 10% in the rest of the months. So this figure should increase by 10% in the rest of the months. So I'm going to fix this one as well because the rate is fixed and it will be increased by 10%. Now you have to remember, if you are using this product function, you should always have this rate table with you. If not, it will be difficult for you to refer the cells. So you can see in the first 2 months, it's same. Then after that, it's differ. Now next one. Here, the third one is referring to the interest. But under the additional information, it's in the sixth place. In the sixth one, it said interest will increase by 1% in every 6 months. So every 6 months, it will be increased just by 1%. Now, when you get this value, so you know that from January to June, we have just 6 months. So after the June only, there will be additional 1%. So here, no need to multiply by this 1% increment. Therefore, we are going to use the absolute cell, or we are going to refer the same value over the period of time by using FV. F4 key, we can absolute the value. Now we are going to get the total cash inflow. That is the summation of all the cash inflows. Then about the purchases. Credit purchase of raw materials are expected to increase by 15% in each month than the preceding month. So this credit purchase should increase 15% over the preceding month. So here also I'm going to use the product function. So this value should multiply by 115%. Since this value is same, I'm going to fix it. If not, you can use the relative cell reference without fixing it. It's also fine. Then I'm going to drag it up to the month of June. Then direct labor. Direct labor will increase by 8,000 in the next 3 months. So it will increase by 8,000. Now I'm going to use the 1,000 separator so I can easily identify the numbers format. I'm going to decrease the decimals. So here, when you go through, you can see the direct labor. Now we have 120,000. Now it will increase by 8,000. So we have to add 8,000 more in the next 3 months. So here, we are going to refer this value and we are going to add up this 8,000 here. So in the February month, it will be 128,000. So the next 3 months means up to the April month. Then after that, it will increase by 12,000 over the value of the month of January. So it should be increased further by 12,000 over the figure of the January month. So in May and June, it will be 132,000. Now we are moving to the variable overhead. Variable overhead will increase by 3% in the next 3 months. So this should be increased by 3% in the next 3 months. So we can use the product function, and this value should increase by 103% in the next 3 months. Next stream is up to the April month. Then it will decrease by 2%. By means the remaining value, which means 103, should be reduced by just 2%, which means earlier we have 303. Now we have to deduct 2%, which means now the value should be 101%. Here also we are going to use the product function. And the original January figure should now multiplied by 101%. Now we are going to calculate the total outflows. For that, we can use the sum function. Here, rather than typing the sum function, you can use the auto sum as well. Now we are going to get the total for each month. For that also, you can use the auto sum function. Once you calculate the value, you can drag it up to the end of the table. Then remove the blank cells. So now you have total inflows, you have total outflows, which means you can calculate the net cash flow. Net cash flow means total cash inflow minus total outflow. Now we are going to calculate the balance. Balance also refers the same. So here you can transpose the figures. Transpose will enable you to rather duplicating or copying the referring the same cell. Then what I'm going to use, I'm going to calculate the end month value. End month value is the summation of the balance and the beginning balance. So you know, end of the month value means the beginning, right? The beginning value of the February will be the end value of the January. Check whether this is correct. See this one. End value of the January will be the beginning balance of the February. End value of the February will be the beginning balance of the March. So end value of May will be the beginning balance of June, likewise. Now you can see the total figure is a different figure what we have in June. So here, what we are going to do as the opening balance, we have to refer the same cell. So I'm going to use the transpose function and I'm going to take the opening balance of the January for this one. Then here I have to get the auto sum. So for the net balance, I have to just add up the opening balance of the January. So hope you have get an understanding how to prepare a cash flow statement by using maximum use of functions in this paper. So apply your knowledge and do your work easily with Excel. So hope you have enjoyed this video and refer my other videos as well to get the maximum marks in the financial modeling. Keep in touch and stay tuned and see you in my next video.